Hey guys, it's Jen and Cyrus with the Cyrus Fiend team.
And today we wanted to talk to you about some lender programs that can help you save thousands of dollars as you start your home buying journey, and rates have just gone up considerably more than where they've been over the last 10 years.
Yeah, absolutely. So this program that we are wanting to tell you about is called 2-1 Buydown.
And the 2-1 Buydown, it really came into light last year when rates just got so high. When we bought, actually, in this condo, rates were at their highest in Q4 last year, topping out around 7.1%.
Probably the highest in over a decade.
So, we fell in love with the condo, but wanted to make the numbers really work for us. So we found out and utilized what we referred to as the 2-1 Buydown.
So for the first year, you're actually getting 2% lower than the interest rate that's available right now.
So when we bought, it was 7%. That was the market rate. And for our first year, we're actually paying 5%.
Correct.
And in the second year, come October, November, we're going to be paying 6%. And then the year after
Which is
that,
1% lower
yes,
than the rate available now. So that means for the first year, you're paying 2% lower. For the next year, you're paying 1% lower than the rate currently available now. And after the 2 years are up, then you're actually paying the available rate now. So that would be our 7%.
Yeah. One of the largest benefits to this program is that you almost get to ease into your 30-year fixed. Rather than just coming out of the gate and starting at 7%, we're starting at 5% and slowly working our way up to 7%.
This also might afford you additional money that you have ability to access right now. So if you're wanting to do some updates within your home, if you're wanting to buy some furniture, all those things, this will allow you additional cash that you can put towards those items.
The fact that this is a 30-year fixed is really appealing because that allows you to really plan out your life and know that whatever that market rate is, that you got at the time, so in our case 7%, that will never change once you hit that third year mark.
So one caveat to the 2-1 Buydown is that you must qualify for that initial rate, the rate that you're locking in for the full 30 years. So for us, it's that 7%. So we had to qualify for the 7% first, and then we get to take advantage of the program where the first year is 2% lower, the second year is 1% lower, and then that's our forever rate. All right, Cyrus, so we've talked about the benefits of the 2-1 Buydown and what an awesome program it is, but how do we get it? How does this work?
Yeah, so the way that you can get a 2-1 Buydown is by working with an excellent real estate agent and negotiating with the seller a seller credit. So as the buyer, you get a credit from the seller, and in this instance for us, it was about $14,000, $15,000.
15, yeah.
And we negotiated $15,000, and that money is what's being used to essentially subsidize our first 2 years' payments.
Right. So I can't just use my own $15,000 to do this?
Right. The buyer, it's a very strict rule. The buyer cannot use their money to allocate towards the 2-1 Buydown.
Yeah. It's basically like buying down your rate, but instead of buying it down as a forever rate, we're doing just for the 2 years, but the seller's money is what has to pay for it.
Yeah, it has to be the seller, and it makes sense, right? Why would you front, or why would we fronted $15,000 to have a 2% lower rate for the first 2 years?
Doesn't make any sense.
Because we would have just spent that money anyway, just as the loan progressed.
Right. We got the 2-1 Buydown, and our hope is that the rate is going to go down so that we can refinance hopefully into a lower rate, right? But what if what if tomorrow the rate drops enough and we feel comfortable to refinance? What happens to that money that we just got from the seller and negotiated? Now it feels like, poof, it's gone.
So that money is held in an escrow account with the mortgage company. And if Jen and I decide to refinance here tomorrow or in 6 months or something like that, and there's still money in that escrow account, the kicker, and this was what really sold, I think, both of us on it, which was, say there's $8,000 left in that account. That money will be used at your refinance to pay down your principal mortgage. That is a really big deal. There is no other instance, period, that you can use a seller's money to pay down your own mortgage. So if we had a $500,000 loan and we refinanced and locked in a 30-year fixed at, 5.25%, and there's still $8,000 left, our new loan amount would actually be $492.
So let's run you through an example. So let's say you're purchasing a house at $700,000.
Right? 20% down.
20% down.
And some taxes and insurance estimated.
Yeah. So at the 7% rate, your monthly payment would be roughly $4,000.
Right.
Right? So for that first year, when we're getting the 5% rate, what would our monthly payment be for that first year?
About $3,300.
Okay. And then the second year, when we are getting the 1% rate buy down, so we're closer to that 6% now.
It would be about $3,650.
Okay, so that gives you an idea of what your payments would be. The amount that is due between that $4,000 and whatever your monthly amount is, it's actually being paid from that escrow account with the seller's money that's sitting there to pay it for you.
So when you pay $3,300, $700 comes out of that escrow account to cover that differential.
Right, so still $4,000 is still going to the mortgage company every month. It's just that you're paying your portion of the $3,300 for the first year, and then $700 is coming out of escrow and going to the mortgage company. Pretty cool, huh? All right, Cyrus, let's talk about the downside of the program.
So the downside is you have a 7% 30-year fixed, which means that once those first 2 years elapse, you're stuck with that 7%. Of course, a 30-year fixed is an excellent loan program because it really allows you to plan. But being that it's higher than what we've been experiencing over these last few years, you as the borrower want to make sure that you're okay with whatever that market interest rate is. So if Jen and I were extremely uncomfortable with that 7% rate, it would not have been a good idea, and it would have not been a good purchase.
Right. Yep. And so with the 2-1 buy down, we are kind of taking the bet, the risk, the hope that the rates are going to go down so we can refinance. But either way, we're good with that 7% if we can't refinance within the 2 years.
Yeah. Going into it, we were saying we're going to be okay with that 7% rate. Mm-hmm. But of course, if rates go down, which we do expect them to come down, they've actually come down 1% since last November. So it's only been 3 months, and now they're 1% lower, which is good. So hopefully later this year, the expectation is that rates will come down even more. And not only will we have paid a 5% rate when rates were actually 7%, but when we refinance, say in June or something like that, and rates are 5.5%, fingers crossed, we actually get to take, the $9,000 that's left over in that escrow account and pay down the principal mortgage.
Would be a huge bonus.
Yeah, we'd be switching to a 30-year fixed at that point and locking that in.
Okay, and another thing is that some lenders out there are offering the ability to refinance for free. So what that means is you get locked into this 2-1 buy down program, and then when the time does come that you can refinance or you want to refinance, they're allowing you to refinance for free, which normally there's a cost associated with refinancing.
So in a traditional refinance, the costs associated with it are the loan fees and then title and escrow. So say for a property like we gave earlier, $700,000 single family home, your refinance could be about $6,000. It's very common that if you do a 2-1 buy down with a lender to purchase that property and you refi, they're going to waive your loan fees. So you're still on the hook for the title and escrow, but it can save you about $3,000 to do the refi with that lender.
Right. But not every lender out there is offering that free refinance right now, but it's something that you can look for.
And the caveat is that you purchased the loan with them originally.
Mm-hmm. And we can definitely connect you with the lenders that we know and trust. They are preferred lenders and help guide you towards which one will have the right program for you.
Yeah, there's lots of loan options out there. This is not the only one. And you'll find that having a really excellent agent and lender and just team behind you, they'll be able to guide you to give you the best opportunity to save the most amount of money, make the most amount of money, and optimize your finances.
Yeah, and just because this program worked for us and it was the right situation right then and at that time doesn't mean that it's going to be the right situation for you. I know in the past we had looked at doing an ARM, which at that time was the right option. So it all just depends on what is the right option at the time you are purchasing. Thank you so much for watching. If you do have any questions at all, feel free to reach out to Cyrus or myself or anyone on the team. We'd be happy to guide you through this process.
If there's any other topics you want us to cover, definitely comment below. And of course, don't forget to like and subscribe. We're going to be doing a lot more content like this moving into the new year.